everyone. Welcome back to the Always Closing podcast. Today I have my friend Cendy here, which I've been looking forward to interview her for a few weeks now. Actually, I think I contacted you maybe a month ago.
Yeah.
And she was in the process of moving here to Orange County. So now that you're all moved in, we finally got the chance to do it. So, Cendy, you work at Cornerstone First Mortgage,
yeah.
Right? Yeah. So tell us a little bit about, actually before that, tell us about your whole move to Orange County. What made you move to Orange County from LA?
It was honestly like a random, just in the moment thing. I was living in downtown and I was looking to move just because I had some problems with my building. My roof was having all types of issues and I was on the top floor. Okay. And it just kind of made sense. I was browsing around other buildings in downtown, and price-wise, it just, I don't know.
You wanted to change too?
Yeah, I wanted a little bit of a change. It's a lot more fast-paced over there, and I don't know. I feel like this building is so much nicer than where I was, and
right.
Price worked out. My friends are here. I just kind of missed it.
Did you grow up in this area? Or?
So I grew up in Downey, and then I moved here in my 20s, and I was here my whole 20s. Then I moved back to LA, and now I'm back.
Because I remember when I first met you, I think you were out here somewhere.
Mm-hmm. Yeah, I was in Costa Mesa. Yeah.
Okay. What's the big difference from living in LA to here? Besides.
I didn't really realize it until I moved here a month ago, but. Just the pace, it's so much slower here.
Yeah.
In my 20s, obviously I was partying and stuff, so I felt like it was fast paced here, but it's really not compared to downtown. Right? Literally, I have not had anxiety one time since I moved here. It's amazing. Yeah,
my first job out of college, I worked in Century City. I used to drive from Diamond Bar to Century City every day. It was 2 hours each way. And I just literally changed jobs because of that. I was like, I'm going to work in Orange County doing the same thing.
Yeah.
Because I can't deal with this every day,
Yeah.
So LA is tough.
It is. I'm a driver too.
You don't mind driving a lot?
I don't, yeah. I mean, one of my first sales jobs, I was driving from Downey to Laguna, every day. And it was a part-time,
really?
very low-paying sales job, so.
You were in T-Mobile before you were doing this, right?
Yeah. Mm-hmm.
Well, tell us a little bit about your background. What made you switch into mortgage? Because you've been doing this a few years now, right?
Yeah, I'm going on 4 years. And before this, I was in sales for T-Mobile, mostly wireless sales. So before T-Mobile, I worked for AT&T. But obviously, moving my way up the ladder in those types of companies, really is just... I worked really hard at those companies and I was there for a lot of years and I got to the management positions, but the money just was not worth it. I don't know. I just saw people in real estate killing it and I was like, I'm pretty sure I work harder than those people. So if I apply my work ethic to that, I'm sure I can kill it.
And you do work super hard.
Yeah.
Because I feel like every time I'm with you, you're working no matter, and that's not just even work related, even if we're out of town somewhere.
Yeah.
Because we're friends more than just working together. So I've been with you out of town and you always, I always expect you walking up with your laptop in your hand.
The other day I walked up to my friends and I had my laptop open and I was working and they're like, dude, what are you doing? But the joke's on me because I left T-Mobile mainly because I wanted weekends and to be able to go to events and not work nights and stuff.
Now
I'm working 24/7. So
how do you feel about that? Do you not mind doing it or would you rather have a set schedule and then have off days? And do you have off days or are you just available anytime?
Both. So for T-Mobile, I didn't really get to pick my own schedule for the most part. So if I had a wedding or something, sometimes I would have to miss it because I was in a management position and the store came first. Now I make my own schedule. So it sounds nice, but even though I'm at your wedding, I'm still working at your wedding. It doesn't matter. So it's just kind of give or take. I do like it better because I get to, travel and do all those things that I love now, but it's not less work.
Yeah, it's not. Yeah, I'm the same way. I feel like I'm always working, even when I'm on vacation or whatever. People are oh, you can always go out of town every few weeks. And I'm like, yeah, but all those times I'm out of town, I'm working.
Still handling business.
People are at the pool and I'm in the room working.
Literally,
So I mean, it comes with the job. So, I mean, you got to do what you got to do.
Yeah. Especially for like us, we're building like our own brand kind of. So it's like, we're just cheating ourselves if we're not clocked in.
Right.
Quote unquote.
Okay. So what's like contributed to your success so far? Because I feel like people that are as busy as you are have been in the industry a lot longer than you have. And you said, what, 4 years now?
Yeah.
So that's not a lot of time for you to be like, I think at the level that you're at already. So what's contributed to that, or what's helped you get to that level?
I mean, I feel like it's a cliche to say I grew up like very poor, but I did. And so I've always just been a hard worker ever since, my first job, I was 15. I always knew like if I want stuff, I need to work for it. So it's just been very like ingrained in me. I'm also like a single income household. So like I don't, my parents don't help me out or anything like that. So it's kind of like a do or die type of thing. Yeah. I enjoy it.
That's good. How do you like working at Cornerstone First? I feel like they help you guys a lot with the marketing, and because I just came across other profiles of people that work there, and all you guys have really good like marketing material. So is that something that they help you out with?
It is, and actually, so we're based out of San Diego, like the main corporate office, but my branch was in Pasadena. We're actually moving to Irvine, which I'm so excited about.
Nice.
I've been trying to plant the seed to move to OC for so long. So we're opening our office here in OC like this week.
That's like 5 minutes from here.
At the Spectrum, yeah.
Oh, okay.
So they do help us a lot. Our office itself is very selective on who gets to like work in it. Yeah, so it's only like a handful of loan officers. That's
interesting, because a lot of loan companies, they want to bring in as many people as they can.
Yeah, no, we're pretty selective. I would say like mostly like top producing LOs. But yeah, we specialize in marketing. So basically for like our agents too, if they want marketing, we help them with their marketing. So we're all pretty good at like shooting and editing and doing videos and stuff like that for agents to bring value to them. So yeah.
That's good. Speaking of videos, that was one of my questions, is you make a lot of content, providing a lot of really good value, I think, like to people that are watching, especially people that are not in the industry and don't know some of these terms, or, this stuff is confusing. Like for someone that doesn't work in this stuff. So why is it worth it to you to make like so much content? I mean, you must spend a lot of time doing this stuff. So what drives you to do that, and how does it benefit you?
Well, I came from like a sales, but training and like management background. So like my favorite thing to do with my team in the past was like a teach me type of learning. So when I switched industries, I didn't know what the word escrow meant. Like I had no idea, and I just quit cold turkey, and I was like, I'm going to go into this industry, and like I know I'm going to make it because I'm a hard worker. Right. But I didn't know anything, and it was when I was learning, like for the first year, I was like, what is all this stuff? Like, so if somebody that works in the industry doesn't know, like, how do you think buyers feel? Like,
exactly, yeah.
So I just figured, what are like questions I asked myself that I can now answer, and then kind of make the mortgage process smooth. And a lot of people, they'll follow me on Instagram, and through my videos, like we start talking, and then, a year later, 6 months later, whatever, then I'll get them into escrow, and then it all works out for everybody. Yeah.
And I think you're not necessarily doing it. I mean, it contributes to your sales, right? But it's like a long sales
I enjoy
process,
doing it,
right?
Yeah.
So that's good. I mean, I understand that, because like I've hired people that still work with us now, that they started at the escrow company, and they literally had no idea what escrow was, And I was like, I can't really explain it to you within a few minutes, so you just got to start it. You just got to start working, and you'll pick it up.
There's so much, like every transaction is different.
Yeah.
So it's like sometimes if somebody asks you like a generic question, there's not like one answer to it. So,
exactly. Yeah. Especially even like with us in escrow, like literally every file is different. So people that have been in the industry, like my mom or some of the other escrow officers we have for like 20, 30 plus years, they go to each other because they're like, well, what do I do on this? Because everything changes all the time, or stuff is different in different situations.
Same for us, like for sure.
Let's see what else I got for you.
Okay.
It's not too bad, right?
Yeah.
Let's talk about rates.
Okay.
This is in your field right here. So what's going on? I know they keep going up, and how high do you see them going?
Historically, rates are not that bad right now. So I would say for like a government loan, they're like low fives, conventional, maybe like a 5.7, 5.8, like standard, not even like the greatest FICO. But obviously last year they were like in the 2s and 3s. So everybody was like, oh, the rates increased so much, but they really didn't. Historically, like they were in the 6s and the 7s. I actually refinanced my parents
Recently?
last year when the rates dropped.
Yeah.
They had a 6. They had a 6 for like 15 years, and because that's what rates were. And so rates now are not even where rates were before that huge drop that we had.
Yeah.
But in the recent weeks, I've actually seen them dropping a little bit. They're like trickling down a little bit. I don't really see them getting to like 7. I think that they're gonna kind of stay.
That's what like
some
people think, right? I've seen stuff online like, oh, it's gonna be a 7.5, 8 maybe.
Yeah, I don't know. I don't think so. But if I knew the answer to that, I would be like a millionaire.
Yeah, nobody knows.
Yeah, no one knows. Yeah, but I think that they're gonna be like 5, 6.
Okay.
That's where I see it. And house prices are just gonna keep rising. I don't see them going down. I mean, they never do.
I think a lot of people are thinking they're gonna come down. I mean, I have a feeling they're gonna come down a little bit. Not as much people were talking about a crash, like 30, 40. That's not gonna happen, especially here in California.
In 2008, they were like couponing, giving out mortgages, like they didn't check anything. So this is not like 2008.
I was back. I mean, I was already working in escrow back then.
Yeah.
I remember
you were balling then.
I was a notary at that time. And even just doing notaries, I was like 4 or 5 notaries a day.
Yeah.
Like it was crazy. But I would look at some of these loans, I'm like, wow, like this loan is gonna like jump up to like double the payment in like 7 years. I'm like, how are people gonna handle this? You know? So yeah, it was crazy.
Yeah, there's more regulations now on the loans, and we do have crazy products at Cornerstone. Like we have no income loans and stuff like that, but they're more regulated. You have to put more money down. You can't just like sign a piece of paper like it was in the past. So I don't see it happening like that again. And I have a lot of people that are like, I'm waiting for the market to crash and then I'm gonna buy. And I'm like, well, you're gonna be waiting forever. So, you always think like, dang, I should have bought like 10 years ago. I would have had this much equity.
Yeah.
And
I mean, I have a lot of friends that are in that exact same situation. You know?
Yeah.
And I was even the same way. Like before I bought my first place, it was 4 years ago now. I was like, no, I'm going to wait till it comes down, and I just did it. But thank God I did, because like I already got a ton of equity in my place now. So I can imagine the people that like are waiting,
Yeah, for sure.
So with rates going up, like how hard does that make your job as a loan officer, right? Because I mean, especially on the refinance side, because I'm sure when they were going down, it's such an easier sell to tell someone to refinance, right?
For sure.
So what do you do? Like, what tips do you have for loan officers out there when rates are going up?
I mean, obviously nobody can control the market, and serious buyers are going to buy no matter what's happening, right? Like they're going to look at the numbers and say, okay, if my house drops $50K, but the rate goes up, like what's the payment difference? So, I feel like motivated buyers are always going to buy no matter what, but also, obviously we did lose like almost half of our business, like refinancing. Like last year, like 90% of my business, not 90, but like a lot of refis.
Yeah.
So everybody was killing it, but now it just means you need to work harder and you need to, all the things that we weren't doing during COVID, like open houses and, prospecting our events and stuff like that. We just need to start doing it again so that we can make sure that we get our clients, because the sales are out there, but it's just, like who's gonna, I feel like a lot of like the weakest links dropped out.
Right.
In the first half of the year, and now it's just more business for a serious loan officer.
It makes it tough too, because there's so many people online making videos, and a lot of people don't know what they're talking about, right?
Yeah.
And a lot of people aren't professionals like you that work in this. So
yeah.
I think that's a tip that, like, for people maybe watching this that are not in the industry, is like listen to people that are actually in the industry, right? Because everybody has an opinion, right? Like you're like here and there, like, oh, this is going to happen. First of all, nobody knows.
Yeah, nobody knows.
Especially people that, do something completely different.
Yeah.
Maybe work in a restaurant or something.
Literally, yeah.
Or give you mortgage and real estate tips, you know what I mean? Those are not the people you should be listening to. You should be listening to people like her, follow her, because, she knows what she's talking about.
Yeah. And also there's a lot of lenders, this is for you, that are like, obviously you want to get the client, right? But they're, quoting still a 4% rate. And so by the time I get the client, it's like, I'm giving you the real rate. And now they're like, I don't want to go with her. I'm going to go with like this magical loan option that they gave me.
That they see on a billboard somewhere.
So a lot of I recently opened 4 escrows last week, and 2 of them are save deals where they're dying with the other company because they can't provide what they said, what they promised, because it doesn't exist. And so I think that like the ethics of it is really important, and it's missing from our industry. And that's like one thing I wish that I could change about it is like, how do we weed out like the liars and the real professionals? Even if it doesn't sound as good, this is the reality of the market, and like you need to be honest with your clients, basically. Right.
You know what I was going to ask you too that I see a lot is loan officers get really upset when they see realtors quoting rates.
Oh my gosh.
Why is that? Why? I mean, because they're around it, so they kind of know. But why does that upset you guys so much?
That is that's the point. Okay, because so a realtor will text me like, "What's the rate today?" And I'm like, "Bro, for what? Like, are you doing an investment property, a condo? What's the purchase price?" So rates are based off of your FICO, the loan to value, the type of property, the purchase price, like because there's like loan limits by county. So you can buy a house today and I can buy a house today and our rates will be completely different depending on like our loan and our situation, our file, and like all those factors.
Right.
So lazy lenders will tell them like, oh, they're like in a 5 or what, just whatever, like just go away, you know? And then they'll start quoting like today's a 5, but then somebody with like a 500 FICO comes to me and I'm like, dude, your thing's like in 6.5 or like whatever. I don't know. I mean, realtors don't have like the pricing engine to look look up an actual scenario, and then they're just quoting things, but then we have to explain.
You have to answer.
We have to answer to the clients when their scenario doesn't match that. So that's why and then like no scenario is the same. So yeah, obviously I'm like very passionate about this. I'm like, stop doing it. Yeah.
Okay, let's say someone wants to buy a house 6 months or a year out from now. What are some tips that you would give to start preparing for that? Should they reach out to you now to kind of get like an idea of what they should be doing the next 6 months to a year?
I think so.
Or should they start doing other things before they get to that point?
Well, we look at 3 things. We look at credit and assets and income. So they need to make sure that they have a 2-year history. So if you started your job a year and a half ago, then you probably don't want to reach out yet.
Right.
If you know that you're going to pay some things off, maybe you want to do that first. But absolutely, I feel like it can never be too early to start building a roadmap. Like I do, none of my clients are like, hey, 5% maybe, or like, hey, I want to buy, and they're ready. Most of the people we've been talking through my Instagram or whatever, and they'll talk to me before, like 6 months or a year before. That's a perfect time frame, I think. And we'll build a roadmap, and I'll look at their credit and say like, hey, here's the things that you can pay down, or like, here's how much you have to save. Here's how much income you need for this price point, and just kind of get them ready that way. But
and like you said earlier, is it different with every situation? Like, is there like general tips, like maybe pay off your credit cards, or some people shouldn't do that, or like, is it different in every situation?
It's different in every situation because not to get like too into it, but we look at the minimum payment every month, not the balance. So somebody's like, oh, I owe like $20K, I'm going to pay it off. But if your minimum payment's only $50, you probably want to pay off your $400 card that's minimum payment is $200, because that's hurting you more. So I need to look at it first and then kind of like give you my advice on which things to take care of. Yeah, because then you could have pocketed the $20K or whatever the case and for your down payment. Yeah.
Okay. And how about someone that's on the opposite side of the spectrum where they're like ready to buy now? Like, are you going to kind of give them tips? Hey, I need you to do this stuff first, or normally can you work out some kind of situation for someone that's ready now and kind of contacts you at the last minute?
If they're ready now, we can probably make it work. I mean, this type of person is like a mathematical person that knows like, hey, I already did the income. Like, yeah, I have a good credit score. I have the down payment. And we have so many products that even if you don't have the greatest credit score or whatever the case may be, like we can make something work. We actually, we do things for business owners all the time where like we don't show their taxes. Like there's stuff like that where we have creative options for everybody. So yeah.
So you have like programs where, because like a lot of business owners, like they write a lot of stuff off or whatever, right? So they're not showing a ton of income. So you can help people in those situations.
Yeah. We have like bank statement only, where we only want to see your deposits that are coming in. Or we have some where we don't show any income at all. You just have to come in with a higher down payment. And of course the rates are like a little bit higher, but really it's not that much compared to like paying Uncle Sam. Like, do you want to pay Uncle Sam or do you want to like build equity, you know?
Yeah.
But yeah, we have a ton of stuff.
Okay.
Yeah,
good.
that's why I love my company. We have so much stuff.
Awesome.
Yeah.
So what maybe are some tips that you have for struggling loan officers out there, maybe, especially right now, right? Like you said, like rates are going up, so it's making your guys' job a little more difficult. What tips or suggestions do you have for someone that's struggling or maybe new in the industry?
I would say the biggest thing is don't get discouraged, because I feel like the hardest part of our job is like we're basically motivation. Yeah, we're basically like self-employed.
Right.
No one is giving us deals. I mean, if you're like a lead generated loan officer, then that's different. But for most like self-generated loan officers, the hardest part is just staying motivated. But you know, it's not like, it's literally facts that if you work hard, like the money will come. Like the money will flow. You just have to keep trying and keep trying your best. And I really would say marketing is really important. Once I started building my Instagram,
how big of an impact did that make, like everything you're doing now? Because like I mentioned before, like I think I see content from you every single day.
Yeah, I try to
like,
post every day.
Not just your story and like stuff you're sharing, but like stuff that you took the time to like shoot and edit.
Yeah.
Like how much is that different?
I mean, like maybe like 80% of my business comes from online now.
Really? From your Instagram?
Yeah.
Okay.
Yeah, and my Instagram only has like 4,000 followers. Like I don't even have like a huge following or anything, but I do see that people share my stuff a lot. So like when you go to your insights, you can see who's sharing. All my posts get shared all the time. And a lot of people will say like, hey, somebody told me to look up your Instagram. And so here I am. So I get a lot of that.
So you get a lot of random people too, not just people that you wouldn't necessarily know. Oh, that's good.
Yeah, I mean, mostly randoms.
Wow, that's interesting.
Yeah. I mean, I become friends with everybody, but no, like at first they were randoms.
Right. What's next for you? You got any plans this year? Anything you want to start doing, even if it's not work related? Or just more of the same?
I think more of the same. I think the first quarter of the year was pretty slow for everybody. So, you know, obviously, thank God it's been picking up for me. And obviously, I keep working hard every day to make sure that happens. But yeah, I think I'm just going to keep, you know, I just want to keep growing my business to the point where, like, hopefully I have, like, all my assistants doing everything for me at one point, and I can just specialize on the marketing and helping agents do their marketing and kind of switch it to, like, to that being the priority, and then my back of the house handling my loans for me.
Okay.
Yeah.
Awesome. And where can everybody get a hold of you if someone wants to work with you, if someone has questions? I know they can always reach out to you.
Yeah.
So where's the best place to get a hold of you?
I mean, my Instagram, like we were talking about, it's Cendy the Lender. And my application, if you'd like to apply, is also cendysthelender.com.
And that's spelled a little different, right?
Yeah. So we'll edit that in so that it's Cendy. Yeah. Cendy the Lender. Yeah.
Any last thoughts? Anything you want to?
No, thanks for having me. I was telling him before this, I'm really not good on camera, even though it looks like it on my Instagram. But it just
I was actually really surprised because you sell it good on camera then, because I was thinking like, oh, this is going to be cake for you, right? Because you do this every day.
No,
I was so surprised when you told me like you're not about doing videos.
I'm not about it, but that goes to show, like, when you don't want to do something, like, you just have to do it and the results will come.
Right.
Like, you're growing when you're uncomfortable. So that like an old boss told me that, and I've never forgotten it. Like, you're only growing when you're uncomfortable. So every time I'm like anxious about something, I'm like, okay, something good's gonna come from it.
Someone told me like everything you ever wanted is on the other side of your comfort zone.
Yeah, like, and that sucks, but darn, like it actually is true. So yeah, we just gotta keep, like, the days that you don't want to work is like when you should work. Yeah, that's true. Well, there you have it. Thank you so much for tuning into this episode. If you have any mortgage questions
or real
estate,
this is your girl. So we'll put her information in the information below. Thanks for tuning in again, and we'll see you next time. Thanks, guys.